back, folks. We got markets in the green, and right now we got yields with a little higher price, lower yield, dollar weakness, markets moving. And right now, to talk about all of it, folks, we're going to jump over to our man, Shawn Edwards. Shawn is Vice President, Institutional ETF Strategist with Direxion. Folks, you can head on over to the front page of TFNN. You'll see those beautiful Direxion banners. Give them a click. You can head on over to the Direxion homepage, Direxion.com, and we're going to be talking about some of these ETFs on Fed Day. Shawn Edwards, good afternoon.
Hey, Tommy, thanks once again for having me. And yes, Fed Day. Hopefully it's bringing an early Christmas to most traders. So hopefully the trend
we got
continues.
Equities higher, Shawn, and we got the cost of debt cheaper. So we'll start with that,
Yes.
right? Why not, man? Listen, you guys got some great ETF products. Talk to me, please, Shawn. For investors out there, specifically on Fed Day, man, yields rocking. I mean, how about the Fed? They're going to be buying $40 billion of short-term treasuries every month now. We got some volatility, man. What are we looking at, Shawn?
Yes.
Talk to me, please.
No, this is a great environment for a few different areas of the market. I'll start in particular with some of our fixed income products. So traditionally what we see is when the Fed decides to cut rates and yields fall, that bond prices are going to increase, right? So for those traders that, are looking to trade around the Fed's interest rate cut decisions, whether they're dovish or hawkish, you can look at ticker symbol TMF and TMV. Now, TMF and TMV, there are 3X bull and bear ETFs that gives you exposure to the ICE 20-plus year Treasury bond index. So when you think about today, if you were anticipating that the Fed was going to cut rates, then you would have looked at our bull ETF, because the movement of this ETF is going to be based off the bond prices. So that means you would have been bullish bond prices increasing. So just providing that tidbit there. So again, great tools for those traders that are looking to take advantage of some of the volatility that we're seeing in the market just due to the Fed deciding to cut rates. So that's a 20-plus year bond index. And I'll also highlight TMF. We've seen outflows year to date, net outflows year to date within TMF, but it's not because of underperformance in the fund. It's because traders are looking to take advantage of the rate of the Fed deciding to cut rates. So just adding a little bit of flow information in there for you all, just to give you some insight. We're typically seeing a lot of volatility within that product suite. So again, the 20-plus year Treasury bond index. And now moving to the shorter end of the curve, if you are looking to trade the 7 to 10 year Treasury bond index, you can look at ticker symbols TYO and TYD. So similar to TMF and TMV, however, this is just the 7 to 10 year bond index that you're getting exposure to. So I'll start there. Another great tool for your toolbox, or an arrow for your quiver, if you are a trader and you're looking to be mobile and agile and trade the Fed's interest rate decisions.
It's pretty cool, man. We're coming. Even Chairman Powell, he was on the air right before we came on. And, nobody knows the answer here. There's a lot of unknowns. Even the Fed, they talk about, this is a very unusual time. I'm not putting words in the chairman's, but the fact that, there's inflation is around, right? There's some weakness.
Yes.
Where do we go? There's, variables, unknowns. We got a little volatility in this market, I think, for sure.
Absolutely.
Where do we go from there, Shawn? Other avenues? Where talk, please.
So, as we know, we can obviously trade interest rate sensitive securities. So if you're looking to trade just opportunities when the Fed decides to cut rates or an easing policy, you can look at small caps. Small caps have been in sort of a pattern here, right? Very sensitive to the Fed deciding to cut rates. We know with small caps, once the cost of borrowing gets lowered, they typically outperform. And so that allows traders who are looking to take advantage of small caps to look at the market for some trading opportunities. So I wanted to introduce ticker symbol TNA and TZA. So that's the Direxion Daily Small Cap Bull and Bear 3X ETF. So that gives you exposure to the Russell 2000 index. So again, some of the companies that are small cap, if you're looking to trade just the volatility around interest rates, as we know, just the sensitivity that these smaller companies have to borrowing costs, you can look at trading TNA and TZA. And similar to TMF, we're seeing that TNA has had net outflows year to date as well. But again, traders that are looking to be contrarian, they're looking to take advantage of some of these macro decisions that are taking place. So again, TNA, TZA, if you're looking to trade small caps and take advantage of the Fed cutting rates.
And man, we got to move in those small caps up. We were just up 2% right there today at all-time highs. And you got, TNA, what do you have, 5.6%, I think, something? Yeah, 5.5% on the TNA, man. Those small caps, they're loving it. Quite a run this year. Yeah, quite a run, to put it lightly.
Yes. And then just lastly, another just trading opportunity around the Fed deciding to cut rates. As we all know, financials, right? Financials, they react to the Fed deciding to cut rates, especially regional banks as well, and then even some of your larger banks. This is how banks are in business. They're very sensitive to the cost of borrowing as well. So I'll introduce first our daily financial bull and bear 3X ETF. The ticker symbol there is FAS and FAZ. So that gives you exposure to the financial select sector index. So these are the large banks. So again, think of names like JP Morgan, Chase, Citi, Bank of America, etc. So if you're looking to trade the big banks and their price sensitivity to interest rate decisions, you will look at FAS and FAZ. And again, these are 3X bull and bear leveraged ETFs. And then the last fund is our regional bank bull 3X ETF. That ticker symbol is DPST. So these are regional banks. So these are even smaller. They're really sensitive to the Fed funds borrowing rate. So again, if you have an investment thesis that these institutions will be in the beginning stages of an upward price trend, you can look at trading our 3X bull ETFs. And as I always say, these are tactical short-term trading tools. Make sure you monitor these trades daily. The trend is your friend, so make sure as you are establishing a position, you have some exits in place as well, just due to the volatility. And like you mentioned a little bit earlier, Tom, we don't know what the Fed's going to do, so make sure you're nimble if you are looking to trade any of our leveraged and inverse ETFs moving into 2026.
It's great advice, man. They're leveraged, daily investment vehicles, folks. But boy, you look at this market. I love this market right now, Shawn. That's myself talking, but we have some volatility, and I think we have nobody really knows, right? Like you say, and sometimes that as a trader, we have unknowns out there, and the market's going to have to interpret it. I mean, you look at DPST, those regional banks, on a day when you got the Russell, like you said. I pulled up a heat map of that Russell, man. Everything is green, and DPST up by 11.9% right now. Well, Shawn, I appreciate the time on a busy day as always, man. The education, the work you guys are doing over there at Direxion. Folks, click on that Direxion banner. Check it out, whether it's single stock, ETFs, leveraged and inverse, some great products out there. Shawn, we appreciate it so much. And the next time we're going to talk to you is in 2026, man. So have a great month, a great new year. And we look forward to the education coming down the line in January. And we'll see where we are then, man. Thank you again, Shawn. Appreciate the update. Thanks as always, Tommy. Man.
Talk to you then.
Okay. Bye. Folks, check it out, Direxion.com. Yeah, how about those ETFs? Some great products on a day where, boy, you got yields rocking, man. And yeah, you better believe it when you're talking about leveraged. And boy, we got some moves, man. TMF, TMV, the longer term. Okay, you're talking about 20-plus year Treasury bull and bear, TMF, TMV. And on the shorter term perspective, TYO and TYD. And yeah, how about the Russell, man? Russell, all-time highs, TNA up 5.4. We're coming back, folks. Stay tuned.